Elon Musk had something big to say about Tesla last night. Elon Musk says that the long-term outcome for Tesla is very high, and I even commented and said, finally you say it again for the people that forgot. As Tesla stock is down about 42% from all-time highs, it does seem like people are in a very narrow channel here. They hear what they want to hear. They don't look at the facts. And the fact of the matter is, we've only really gotten good news for Tesla. But there is a lot of fear out there. There is broader market weakness and, well, some really, really bad data. But we will discuss that in just a moment. Trust me, you do not want to miss it. And I think this is pretty crazy news that validates a lot of what I have said here on this channel in recent days. You can see here the lowest cost variant of the refreshed Tesla Model Y launch series is sold out in Australia. And I think you're getting a lot of this in China, in Europe. I don't think the Model Y just magically is falling off a cliff as far as demand, as some people have suggested. In fact, let me just make this crystal clear again for anyone that is worried about deliveries slowing down in Europe. I really want you guys to understand this and just how crazy it sounds. In 2024, Tesla delivered about 18,000 vehicles in Europe in January. In 2025, Tesla delivered about 8,000 vehicles in Europe in January. That's where you're getting this 45% declining number, but it's kind of stupid, right? It's like delivering 200 vehicles and then the next month delivering 120 vehicles. And yeah, you're going to get a scary headline, but you're only talking about 8,000 vehicles as a difference here. Considering the Model Y, the new Model Y, is launching soon, very soon, like almost right now, right? The next couple of days in many different countries. I don't think it's a fair comparison. It would be like giving Apple grief that their iPhone's sales slowed down 4 weeks before a new iPhone launch. Okay, that happens. That's what you would expect to see. And I do think over the next coming days and weeks, we're going to get a lot more good news about the Model Y and that it's selling very well. And again, I think this is just the start of a string of good news that we're going to get over the coming weeks. Now, China has released a new video tutorial on how to use FSD supervised in the country after it's gaining a lot of traction. And I shared this news with you yesterday. Elon Musk said that he heard FSD in China was the leading topic on Douyin. This is TikTok in China. It's called Douyin. Ashok Alaswamy, which is the head of Tesla's AI and specifically robotaxi division, FSD, he says apparently it's already gotten 1.3 billion views. So you're talking about like the entire population of China, maybe half the population of China, and then surrounding areas in Asia. Regardless, tons of activity and attention. This could boost the Tesla brand. I mean, I think some people are going to see this and instantly want to go out and buy a Tesla. And a former Xpeng director says Tesla's full self-driving is significantly better in China. Oh yeah, and Michael Saylor, if you guys missed it, said sell a kidney if you must, but keep the Bitcoin. This was last night. Bitcoin was dramatically selling off. There was a lot of questions about MicroStrategy going, insolvent or getting margin called. And yeah, sell a kidney if you must. I think he took a page out of my book there. I say that quite often. And we're free falling. Now, Waymo announced yesterday that they are providing over 200,000 paid robotaxi trips per week, up from 150,000 per week in October. And you do have more new Model Y VINs that are being assigned to customers with a white interior in Las Vegas. Steak and Shake says, thanks, Elon, you have fine taste. Tesla charging stations at Steak and Shake. And Tesla Charging says 6 sites already signed, 20 plus sites in design review. Let's lock in those layouts, and tagged Steak and Shake. And then Steak and Shake said, consider it done at all of their locations. So pretty soon you're going to be getting Tesla superchargers at every Steak and Shake location. Tesla has slightly increased the displayed range in the US on the long-range all-wheel drive Model S with the 19-inch Tempest wheels. The new range is 410 miles, up from 402 miles, a 2% increase. And here you can see Steak and Shake says, thank you Tesla Charging. Let's do over 100 locations. Consider all sites approved. And then Tesla Charging responded with 3 fire emojis. ARK Invest says nearly 10% of US Tesla miles were autonomously driven last year. And you could see the mileage driven on FSD is just going straight up and to the right. Tesla's dependability improved in the 2025 JD Power rankings. This study takes measures of a different number of problems from 100 different vehicles. After 3 years of ownership, Tesla ranked at 209. This score places Tesla just below the industry average of 202, but marks a notable improvement from previous years. Elon Musk did share this. You can see Tesla ranks better than Volkswagen, Chrysler, Jeep, Audi, Land Rover, Acura, Mercedes-Benz, Ram, Lincoln, Hyundai, Nissan, and other brands. And it does look like billionaire Ben Horowitz was the one who donated 10 Cybertrucks to the Las Vegas Police Department. The sheriff said, quote, "We ordered these before the Trump Tower explosion. We want these things because the cops inside will be safe no matter what. These stop bullets. They're also a tremendous recruitment tool for us." And Elon Musk confirms that they are just waiting for regulatory approval to launch FSD in Europe. This comes as Tesla vehicles have been seen all throughout Europe, this one in Amsterdam, with LiDAR systems on the top of the cars. Now, the FSD is not going to use LiDAR, but it does help validate that FSD is, working well. And I imagine it might help training or something along those lines. And this is a good sign. Now, is Wall Street going to care about this? Because they really haven't cared about anything else. FSD launched in Mexico. It launched in China. There was not a positive reaction at all. The stock has continued to fall even on these days of, the actual launch, which should have been seen as positive catalyst. The stock was down big time. So I don't know if it's going to matter FSD launching in Europe, but I do think for the business, it is a big deal. I mean, all of this news has been a big deal, but the stock has not reacted. So I wouldn't expect it would react, if we get that announcement. Now, if we take a look at the option activity in Tesla stock, it is continuing its recent trend of being very positive from big money. Now, big money, as I've said before, they're not any smarter than you. Don't fall for that shit. They do have more information than you, though, and they basically always will. So I think that's why I like to look at this more, especially when you are going through these sell-offs, because if big money is loading up on puts, if they're shorting the stock like crazy as the stock is falling, that's potentially a signal the stock may need to fall a little bit more. That is not happening. You have 250 different trades today, totaling $343.58 million, with a positive order value of 78%. Now, yesterday was a huge day for option activity in Tesla. You had 975 different trades, totaling $4.3 billion. That is a crazy number, with a positive order value of 41%. So it wasn't great. It wasn't all too terrible, but it did lean a little bit negative yesterday. If we take a look at what the short sellers are doing today, again, same old story here. They're covering about 200,000 shares yet again today. And if the stock is, down on any given day, in which it looks like the stock is going red as we speak, it is a great sign when short sellers are covering, because that's a pretty good indication that they don't think there's much downside left. And at this point, the stock is down 42% or so from all-time highs, sitting right there at the 200-day moving average. It looks like you found a lot of support there after hitting the low of the day today at $273.60. The RSI is at 25. Historically, Tesla bounces when it goes oversold. I mean, pretty rapidly after that, usually the next day or the next day or two. So when you add all this together, it doesn't surprise me that hedge funds and institutions are covering on their short positions. Oh, and keep in mind the short interest on Tesla is basically at the lowest point it's ever been at. So hedge funds and institutions from that perspective are the most bullish they have ever been on Tesla. Now, the markets did sharply reverse lower. We were actually trading higher, and it did look like today could have turned out to be a good day, and you really need a bounce in the broader markets. The S&P is currently down from all-time highs about 5% right now, but unfortunately the data that we got today was just not good. So here's the deal. Core PCE month over month came in at 0.3%. It was technically 0.28%, which the estimate was 0.27%. So marginally, just marginally, came in a little bit hotter than expected, but the fact it didn't come in super high was seen as kind of good news. Last month was 0.2%, so this was a slight acceleration, but again, not really the big inflation problem. Here's where things get weird. Personal income month over month came in at 0.9%. The estimate was 0.3%. So personal income exploded higher. One could say that is good news because people are going to have more money to spend. The other argument is this is nowhere close to functional with 2% inflation targets from the Fed. Like, personal income went up almost 1% on a month over month basis. There's no way you get to 2% inflation if that is the trend that we're starting. And last month was positive 0.4%. So like you were already comparing a high previous month number. So that's like really crazy. Here's where things start to get negative. Personal spending month over month came in at negative 0.2%. You were expecting positive 0.1%. That's not great. Now, last month was revised up from 0.7% to 0.8%, but still, that is a rough number. We've actually not seen personal spending go negative in the entirety of the last year. The closest we got was 0.2%. If you look at the last 3 years, you actually only went negative once, and that was March of 2023. That's why I'm a little nervous for this bounce that it looks like we were starting to see in markets, because this is really bad data. Okay, I mean, even during 2022, when everyone thought we were going into a recession by September, October, your personal spending numbers were 0.9%, 0.5%, 0.6%. Then they fell to 0%. But I mean, you're negative now. And that really doesn't happen. Why? Because over 70% of GDP is contributed by people spending money. So if people are sharply pulling back spending, that's a big problem. Now, couple this with the goods trade balance that we got today, advanced data for January that came in at negative 153.26 billion versus estimates of 115 billion negative. Not great. Yeah, larger trade balance that's negative. Not great at all. The retail inventories excluding autos skyrocketed from 0.1% as the expectation to positive 0.4%. So inventories are building up. But look at this. Wholesale inventories month over month came in at 0.7% versus an estimate of 0.2%. Okay, why is this so bad? Well, when you mix spending going negative, which it really never does, with inventories that are rapidly building up, and you get an Atlanta Fed GDP Now tracker that is tracking negative 1.5% Q1 GDP. Now, we're very early into Q1. We still have a lot of data to come out, but you went from positive 2.3% yesterday to negative 1.5% today. Like, there is no arguing it. The economy is slowing down. Question is, do we go into a recession or not? And that's why I'm a little nervous, I'm not going to lie, for markets here. Because we wanted to see a bounce. That did not happen. Now, there's other news and other reasons for that we'll get into in just a moment. But I've never seen the Atlanta Fed GDP negative 1.5%. And again, this is going to change. It's going to move back up again. But you're not going to be tracking at 2-3% GDP. That's just not going to happen for Q1. So growth is definitely going to disappoint. And again, you can see here how expectations have changed for GDP. You could see here the latest numbers that we have right here for February 28th, you have GDP negative 1.5%, PCE at 1.3, equipment at 6.3, intellectual property at 5.8, non-residential structures at -2, change in net exports at -248. So the change in net exports what looks like really dragged down the GDP number. But, we're going to have to see. I mean, that's going to make people nervous, though, at -1.5%. Now, the other headlines today that really did not sit right with markets was the Trump-Zelensky-Vance meeting today. This headline here says Trump, Zelensky, and U.S. Vice President Vance argue in the Oval Office. Trump said to Zelensky, "You are gambling with World War III. You have to be thankful. You either make a deal or we are out." VP Vance says it was, quote, disrespectful for Zelensky to come into the Oval Office litigating in front of the American media. Again, you're gambling with World War III. And Vance said to Zelensky, "Have you said thank you once? You went to Pennsylvania to campaign for the opposition." Trump said to Zelensky, "You're running low on soldiers. Then you're telling us you don't want a ceasefire." And then they actually just kicked everyone out of the Oval Office as far as media, and they apparently continued their negotiations. And then it was reported the press conference was canceled, and Zelensky has left the White House early after a contentious meeting with Trump. So it doesn't look like we're going to get a deal there, and that's something that has been a positive for markets recently is the prospect of the Ukraine war coming to an end. And it doesn't look like we're there, or it didn't sound like we're even close to that. The CNN Fear and Greed Index today is coming in at 16. You are in extreme fear territory, almost at midpoint of extreme fear. Yesterday, you were at 18. So this is getting worse from yesterday. The percent of stocks trading above their 50-day moving average today is it was falling. Now it's up 0.64% to about 38%. So stocks are holding up okay right now. But again, that's kind of what makes me nervous as well. If you see a broader market sell-off, then that would obviously be a bigger problem. But still, you're not bullish at all out there. You have almost 64% of stocks trading below their 50-day moving average. So that's a pretty bad number. And here's the main headline on CNBC. It says Trump says Zelensky is not ready for peace after Oval Office fight. You can see today 10-year Treasury yields are down about 5 basis points. Investors are going out and buying the bonds. I think some of this has to do with the Oval Office situation, but the large extent of it has to do with the bad economic data today and that negative 1.5% GDP print. The VIX today is at 21.72. You are up about 3% on the day today as fear continues to escalate. This puts you at, almost a new high, minus the December 18th panic we had after the Fed meeting and the flash crash event August 5th. You're getting up to one of the most fearful levels you have seen in the past year, but I believe this is one of the most fearful levels you've seen since March of 2023. But let me know what you guys think about this information down below in the comment section. We will talk more about this situation with Tesla in the next video. What could be coming next for Tesla stock specifically and for the broader markets, what I am looking to do as well in my portfolio. So thank you guys for watching. Have a great rest of your day, and I will see you in the next one.